A spot ETF, what is it?
A spot ETF, exchange-traded fund, is a type of ETF that holds the actual physical assets it represents, such as cryptocurrencies like Bitcoin. Here's how it works. Physical assets. A spot ETF directly holds and stores the underlying assets it represents. For example, a Bitcoin spot ETF would hold actual Bitcoin. Market performance. The value of a spot ETF is directly tied to the performance of the underlying assets. If the value of the assets held by the ETF goes up, the ETF's value increases, and vice versa. Easy access. Investors can buy and sell shares of a spot ETF on an exchange, making it easy to gain exposure to the underlying assets without needing to buy and store those assets themselves. Liquidity. Spot ETFs tend to offer high liquidity because they can be traded throughout the trading day on stock exchanges, providing flexibility for investors. Transparency. The ETF usually discloses the assets it holds, allowing investors to see what they are investing in. Regulation. Like other financial instruments, spot ETFs are subject to regulatory oversight to protect investors and ensure fair trading practices. In the context of cryptocurrencies, a Bitcoin spot ETF would hold actual Bitcoins in a secure manner and allow investors to buy and sell shares representing ownership in those Bitcoins. This is different from futures-based ETFs, which derive their value from futures contracts rather than holding the physical asset. Spot ETFs are seen as a way for traditional investors to gain exposure to cryptocurrencies without directly owning and managing digital assets.